Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex market news broadcast for Friday, February the 22nd, 2008. Headlines out of Switzerland this morning read, "The dollar fell on a two-week low against the euro after weekday." The dollar fell on Thursday, touching a two-week low against the euro after data showing a surprisingly sharp reduction in regional factory activity renewed fears of a U.S. recession and more Federal Reserve rate cuts. Also, the weekly jobless claims report suggested the labor market was starting to strain from the slowing economy, leaving investors with no reason to buy the dollar. Interest rates futures were at one point fully pricing in another 50 basis point rate cut in the Fed's benchmark overnight lending rates to 2.5% at the next month's meeting. More U.S. rate cuts would further erode the dollar's appeal to global investors, particularly when central banks in Europe and Australia are either keeping rates steady or raising them. The euro-dollar rose to a two-week high at 148.38, posting its biggest one-day advance since January 28th. The falling U.S. stocks dragged the dollar-yen lower to 107.43. The dollar Swissy was down to 108.95. Low-yielding currencies such as the yen and the Swiss franc tend to attract flows during periods of uncertainty, as the low interest rates reflect the capital surplus of the respective countries. News that the Philadelphia Fed Business Activity Index contracted to a minus 24 in February, its worst reading since 2001, rattled investors and confounded economists who expected a reading of a minus 11. Minutes from the Fed's last policy meeting showed that policymakers are worried about still slower U.S. growth even after the series of aggressive rate cuts. The Fed also lowered its U.S. growth forecast for 2008. Investors are even more concerned that the weekly jobless claims data showed more workers were remaining on state unemployment rolls. While investors expect the Fed to continue on its monetary easing path, they are scaling back their expectations for the ECB rate cuts this year, after the French inflation rose at its fastest annual pace in the last 11 years. Futures markets are now pricing in only a 25% chance of a rate cut from 4% by June. Just last June, a June rate cut had been fully priced in. The euro-yen rose to a 5-week high near 159.58, but was last traded flat at 159.15. The pound-dollar surged to 196.35 following an unexpectedly strong retail sales report that helped ease concerns about the health of the UK economy. During the Asian session, Fukui spoke on Japan's outlook. The dollar was weaker in the Asian session against the rest of the G10, including safe havens such as the yen and the Swiss franc. The euro-dollar broke out of its sleepy range to 148.38, while the dollar-yen sold off steeply, reaching 107.15. Part of the sell-off in the dollar was due to the disappointing Philadelphia Fed Manufacturing Current Activities Index, which collapsed further into recession territory. In regards to this particular indicator, a recession, and a severe one, seems well entrenched. Interestingly, there is enough vagueness over the global outlook that it is pushing spot gold to new highs, reaching $949.78 an ounce, but is not translating into risk reduction as high yielders continue to outperform. In addition, crude oil continues to pull back from the $100 a barrel level, and European equities are looking to follow the U.S. and Asia lower. The Bank of Japan's Fukui stated that Japan's economy has been increasingly resilient to external shocks, and economic growth will probably be sustained. However, the BOJ's basic policy stance is unchanged. Comments reinforce market expectations that the BOJ will hold or even cut rates later this year. There were no major events or data releases scheduled in the U.S. or the U.K. today. On the continent today, the highlight will be the PMIs. The manufacturing PMI numbers came out slightly lower than expected at 52.3, and the services PMI numbers came out slightly higher than expected at 52.3. These surveys were expected to confirm that the deceleration in the Eurozone's economy at the end of last year has continued into 2008. The fall in January put the index into the ECB rate-cutting territory, but the severity of the drop suggested that we might see a rebound in February. This concludes our news for today and for the week. Thank you very much for viewing. We hope you've had a great trading week and have made lots of pips. Before we sign off, we would like to invite you to join us at our website at www.succeedinforex.com. There you will find a link to our Yahoo forum, which is also Succeed in Forex. And you'll find additional information about our Traders Training Center, where our motto is, Traders Helping Traders Succeed in Forex. We hope you'll be able to join us again on Monday for our next Forex Market News broadcast. Have a great weekend and happy pipping.